Hello, traders. FX Pip Collector here. Today is Wednesday, February 5th, and this is my morning analysis where we take a look at the US dollar pairs and we take a look at gold. Also, we take a look at a couple other JPY pairs. If you haven't done so already, definitely check out my free Discord trading community, 100% free to join. Link down here in the corner at the end of the video and in the description of the video. If you would like to join my membership program, then you do so at my website, fxpipcollector.com, and you get access to all the benefits listed below and more for only $30 per month. So, anyways, first thing first, I always like to check the news calendar. It's a good habit to get into. Today we got this ADP non-farm payroll, which is almost never a market mover. This is just an estimate of what Friday's non-farm payroll news is going to be, so it's pretty much never does anything. But the final service PMI and the IMS service PMI definitely can be a market mover for sure. And then we do have some oil news today, so definitely make sure that you are aware of what time these news events come out in your time zone. So first thing first, I always like to look at the US dollar index. Let's go all the way up to the weekly time frame real quick just so I can show you. Now, I've been expecting for a very long time that this is an A and this is a regular flat for a wave B, and that eventually we're going to start a big downtrend for a big old wave C. It's starting to look more and more convincing like this might have already ended the wave C of B and it might already be heading down. We don't really know 100% for sure that it's going down. This still could end up being a crutch into the uptrend, but it's definitely looking more and more convincing that the move has already happened and it's already heading down. Looking at it on the daily time frame, I have it labeled as an ABC because I always look at any counter trend move as an ABC because I would be trading a wave C exactly the same as I would be trading a wave 3, so it's not really that big of a deal. Then if it turns back up, I will be subconsciously aware that it might be a wave C, and I'll be more likely to switch my position and go long. If I assume that it's a wave 3, then subconsciously I probably wouldn't be aware when the market shows me evidence that it's not a wave 3, but it's a wave C, potentially holding on to my shorts and turning into a loser. So I always label it as an ABC or a 1, 2, 3, just so that way we don't, get too married to any one of our analysis. So keep that in mind because it's very important when you're looking at any of the dollar pairs except for maybe gold. So moving on to the euro dollar. The euro dollar did make a higher low, as you can see. It made nice 1, 2, 3, 4, 5 waves up. This definitely still could be an A. This definitely still could be a B, and it definitely could go up and make a C and then reverse. But it also could be a wave 1, a wave 2, and a wave 3. How would I trade a wave 3? I'd be looking for longs on sort of time frames. How would I trade a wave C? I'd be looking for longs on sort of time frames. Not really too big of a deal to tell the difference until we see this come up and then break structure down, proving that it's a wave C, or we see it continuing to make higher highs, higher lows very impulsively in a wave 3 because wave threes are supposed to be the biggest, strongest wave of a trend. Going down to the 1 hour time frame, definitely continuing to make high, low, high, low, high, low. And even if it does break down at this point, I would assume that if it does break down, then it's probably just going to be another correction to the uptrend. At this point, I would assume that it most likely will go up and take out these highs over the next few days, probably by the end of the week. And like I said, it's either going to be a wave C or it's a wave 3. Luckily, at this point, it doesn't really matter to me because either scenario, I'm looking for longs at the end of pullbacks, whether it's a wave C or whether it's a wave 3. It definitely does not change my analysis or my trading plan whatsoever. Either scenario, looking for longs on pullbacks. Moving on to the pound dollar, going back up to the daily time frame. The pound dollar is actually one of the ones where it still technically is in a downtrend because it never did break structure. It definitely made nice 5 waves up. It definitely made a corrective move down, definitely impulsive up. It could be an ABC correction. It could make a lower high and go down. We have to be aware that these moves up don't have to be wave threes. They could be wave Cs. So if we do see the end of a trend on this move up on sort of time frames, we definitely need to switch it up and probably go back to looking for sorts. But right now, the trend is your friend. Technically, the market flow is up, so I would be looking for longs on sort of time frames. Going down to the 1 hour time frame, man, nice patterns. Nice little 1, 2, 3 pullbacks, 1, 2, 3 pullbacks, beautiful. If it continues to make that high low series, then I would just suggest continuing to look for longs every chance you get. On the other hand, if it does something like this, breaks structure down in a big way, I personally would stop looking for longs because that's what's going to tell us it's more likely in wave C. If I see this picture right here, I'll stop looking for longs, I'll start looking for shorts. If I don't see that picture, but instead I see this picture, higher high, higher low, then I would continue to hold longs and look for more longs. So going down to the Aussie dollar. Aussie dollar made a pretty significant bottom right here, and it definitely does look like 5 ways down. And it probably is going to end up taking out the high of wave 4 because that's what happens when you have the end of a trend. So keep an eye on your Fibonacci levels. Those definitely could be areas of resistance, but it definitely looks to me like it is going to likely go up and take out the high of wave 4, probably making either a wave A or a wave 1. What's a wave A and a wave 1? It's exactly the same trading strategy, which is looking for longs on shorter time frames. So going down to the 1 hour time frame, what beautiful, beautiful price action. Originally I thought this was just going to fill the gap and pull back, but instead it just made higher low, higher low, higher low, and just kept on going. What are we doing? We're looking for three-way pullbacks, 1, 2, 3 ways down to go long. If price goes down and takes out structure, then I would stop looking for longs and I would start looking for shorts. If price continues to make high, low, three-way pullbacks, then you definitely want to continue to go long at the end of every single three-way pullback, every single high or low you see for what continuation of the uptrend, likely either a wave A or a wave 1. Um, if this really is a wave 3, like it looks like it is on the dollar, because the dollar definitely looks like a wave 3, then this potentially could be a wave 3 also. And a wave 3 is supposed to be a very strong trend. So it might just make small little pullbacks and just continue to make higher highs, higher lows. So moving on, the Kiwi dollar is exactly the same analysis as the Aussie dollar, just a little bit different shape, but exactly the same. Moving on to the US dollar CAD. US dollar CAD definitely has a beautiful 5 waves up. 1, 2, 3, 4, 5 waves up. Now, all we really need to see now is a break of structure to the downside to really confirm. But I mean, the market flow has been down since yesterday, so I mean, I definitely would be looking for shorts. The fact that it's closing below this 88, 78% tells me that it probably is going to take out this low. Then we'll probably see a pullback, and then we'll probably see a big push down. This could be the end of a wave C on the very high time phase, and it could be starting a very big downtrend on the very high time frames. Going down to the 1 hour time frame, definitely looking for shorts unless it breaks structure. If it breaks structure, I would throw my Fibonacci retracement on here, and I would still technically be looking for shorts primarily. But if you are a short time frame trader, maybe you would see like a long opportunity at the end of a wave B, trading the A, the B, the C. You could probably try to go long at the end of the wave B, but I would be very careful. It doesn't have to do that. It could make another lower high. And it could go down, break structure before it even thinks about making a significant pullback. So just like the other dollar pairs, if it makes lower high, lower high, lower high, hold on to your shorts and look for more shorts. If it breaks the low high series, then you can definitely justify looking for longs if you are a short time frame trader. If you're more of a swing trader, then you're probably waiting for the pullback to go short again. Moving on to the US dollar Swiss. US dollar Swiss also made a big turn. This is one of the ones where I was thinking it was going to go up and grab the liquidity from the high of wave 4, but it didn't quite get there. And now that it's turning so significantly, I mean, it probably isn't going to get there. There's definitely still a chance that this is an A, this is a B, and it goes down, makes a C, and then goes up and takes the liquidity. So we do need to keep an eye on it. Like I said at the beginning of the video, this could be a wave C on the dollar, which means it could be a wave C on all the other dollar pairs. So that means it could possibly go down, grab this liquidity, and turn back up. Or maybe this really is a wave 5 and it just goes down, breaks structure, and just keeps on making lower lows, lower highs. Either scenario, I think we should better recognize the price action and trade accordingly. Moving down to the 1 hour time frame. So on the 1 hour time frame, I would, just like all the other dollar pairs, definitely suggest looking for shorts. If this breaks the low high series, at especially at a Fibonacci level, then you could justify going back to longs. But if it continues to make lower lows, lower highs, then I would definitely be looking for shorts at the end of every pullback. I would definitely be holding on to shorts and possibly looking for more shorts. So if this really is the end of a wave 5, then you probably will get a nice downtrend that doesn't break the low high series at least until after you take out the low of wave 4. So most likely, I would assume that it is going to go down and take out this low before you see a much more significant pullback. So moving on to gold. Boy, gold just keeps on rallying. Now, gold moves a lot, especially when there's talks, about maybe upcoming wars or conflicts or anything like that, which there definitely is a lot of that right now. So that probably has a lot of the reasons why. Now, I was definitely thinking this was a wave B, but one thing you have to keep in mind on gold that gold is in an uptrend on the monthly. It's in an uptrend on the weekly. It is in an uptrend on the daily. Every single time frame is in an uptrend. So if you go down to the 1 hour time frame and justify a reason to go short, then you are literally fighting every single higher time frame. Normally, when you are fighting the higher time frames, you end up getting beat up and losing your money. Now it went beyond the 123, which was my next target, but the 138 is also a target for the wave B. 123 and 138 is a target for an expanding wave B. If it turns at that area, breaks structure, then it probably is going to go down, like I've been saying. If it doesn't turn at this area, but instead keeps pushing, then I would be looking for longs. But to be honest with you, because we still haven't had a break of structure to the downside since this move started way back here, I've been suggesting to everybody for weeks now to do nothing but look for longs on sort of time frames until the market proves to us that it's going down, which it definitely has not done so yet. And I definitely wouldn't be looking for that proof of the turn down on the sort of time frames. I'd be looking at it on these higher time frames. So now that we pushed beyond the 123, my next area of resistance is the 138, which is right below the 2890 area, maybe like 2888 or something along those lines. Let's see here. Let me put my pen here. Yeah, 86 maybe, 2886 area. So even if it does go down, I would assume that any move I see to the downside is nothing more than a correction to the uptrend. If it goes up and hits this area that gives you a big break of structure, then at that point I could justify looking for shorts. Unless I see this picture right here, the double top break of structure picture, that 3, 4, 5 shape that you see at pretty much the end of every single trend, then I would definitely not suggest looking for shorts, and I would not recommend looking for shorts. I would be focused on looking for logs at the end of every single three-way pullback, which most of these pullbacks are three-way pullbacks the whole way down. Literally, almost every single one of these pullbacks is actually a pretty much traditional ABC pullback. So what would I be doing now? I'd be waiting patiently for more pullbacks to go long again because the trend is your friend. We are not really trying to identify the end of a trend. We're just looking for pullback continuation patterns on these sort of time frames. Moving on to the US dollar yen. I've been saying for quite a while that I think this wave B is over on every single yen pair, and I think that we're going down for wave C, which will likely take out these lows. Every single one of them, all three of these lows. And I think it's pretty well confirmed that that is the case, and that over the coming months, this is probably going to continue to make a downtrend on the daily time frame. So what's that tell me? That tells me that I better be looking for shorts. I've been telling you guys to look for shorts for a while now. Yesterday we had, it wasn't really a three-way pullback, I will give you credit there. It was more like a five-way pullback, but nice impulsive down, nice break of structure, nice entry to go short, and a very, very, very nice move to the downside. Now, what would I be doing now? I definitely wouldn't recommend going long, not at all. I would recommend being patient and waiting for more three-way pullbacks to go short again for the continuation of the downtrend. I would not recommend going long. I would only recommend looking for shorts at the end of three-way pullbacks, especially if that higher time frame analysis is correct, which I think it is. Moving on to the euro again, exactly the same thing I've been saying about the dollar yen, which is that this is likely the end of a wave B. Likely this is going to continue the downtrend. Real quickly, we'll just go up to the weekly time frame because I believe that we're in a wave C, which maybe won't get down that far, but I would definitely expect it to maybe go down into this area, which is still a long ways to the downside for a wave C of wave 4. So what does that mean? That means that the trend is my friend, and I would only be looking for shorts. What would I be doing right now? I'd be looking for shorts. I'd be looking to try to go short, especially if it is a three-way pullback, which some of these definitely are. 1, 2, 3 waves up, 1, 2, 3 waves up, 1, 2, 3 waves up. This one right here is more of a trend, but definitely a nice break of structure to the downside, which could have got you short again. And what would I be doing now? I definitely wouldn't be looking for logs. I'd be looking for three-way pullbacks to go short again for the continuation of what I think is a wave C of wave 4 on the daily, weekly time frame. Moving on to the pound yen, exactly the same strategy as the dollar yen and the euro yen. I think that the pound yen also is already going down for a wave C of wave 4, which I think will eventually go down and grab most of this liquidity. Might even go down and, this top and become a bottom, someplace like that. So there's a lot of downside potential on these yen pairs. Daily time frame is down. Shorter time frames looking for shorts in a downtrend. You'll notice that I'm not really trying to label anything on these shorter time frames. Literally, the only thing I'm doing on these shorter time frames is going one, two, three waves. Okay, go short. One, two, three waves up, go short. This is more of a trend, but nice breaker starts it down, go short. What am I doing now? I'm waiting patiently for more three-way pullbacks to go short again for the continuation of the downtrend. I am a trend trader. I only trade in one direction, which is the direction that my higher time frames tell me to trade in. Looking for three-way pullbacks, looking for short entries, not looking at any moves to the upside as nothing more than a opportunity to go short again for the continuation of this downtrend. One of the most important things I can say is that the trend is your friend, which sounds like a clue say from an 80s trading book, which it probably is, but that's okay because it is a 100% true in my opinion. So anyways, don't forget to join my free Discord trading community. Like I said, link down here in the corner. And as always, thank you for watching and happy trading to everyone.